Hi, welcome. My name is Kristina Strickland. I'm the managing partner of Rally Wealth and Benefits. And today I have a super special guest. It's actually my father, Bruce Glenn, who is the president of Rally Wealth and Benefits. Today, Bruce is going to be speaking to us just about what's going on in the markets and what we need to know as investors. So, Bruce/Dad, thank you so much for joining me today.
Well, it's an honor to be here, Kristina. Thank you, and thanks for acknowledging I'm your father.
I don't always claim you, but I will claim you today. I'll claim you today because I need valuable information from you.
Gotcha.
Once I have no need for you, you're back to just being Bruce.
Fair enough.
Hey, so this YouTube channel is built for our clients. Videos about just things that are going on in the world, things that they need to know about as investors. So today I wanted you here because I wanted you to talk, it's mid-July. I want you to talk about kind of where we've been in the first half of the year, what you think for the next half of the year. Obviously, you can't do any crazy promises or guarantees or anything like that, but give us some insights on what's going on in the markets. What do we need to know as investors?
Yeah, great. So good question, and it's some of the content we'll cover in the radio show as well this month. But the first half of the year, it's been volatile, but it's been good. Obviously, the biggest topic of the year so far has been Iran. And, it's on again, off again, on again, off again. And depending on where it's at, oil prices have either gone up or they've gone down. And probably more so than any time I remember in recent history, as oil prices go up, stock market goes down, the oil price goes down, stock market goes up. They're really a teeter-totter effect between those two right now in a big way. The other interesting thing about it is, from a purely, let me back up a half step and cover a few more points. So unemployment, the overall economy is good, right? In spite of what you want to hear on the news or the news wants you to hear, because their job is to get you to stay tuned in. Mm-hmm. They get viewership and advertising and so on and so forth. And if it's all rainbows, puppy dogs, and sunshine, nobody's going to pay attention to them. So their job is to scare you. In spite of that, reality of it is, unemployment is running at 4.2%, and there are some different ways to measure that. And then the government puts numbers out, and then they go back and restate what last month really was. And then, oh, by the way, 3 months ago, we're restating that one also. But bottom line, it's been pretty steady, 4.3 and now 4.2%, the most recent numbers we've seen. So throughout history, 6% is considered full employment. Okay. If somebody needs a job, if you're around 6% range, there's a good equilibrium between companies needing people and people needing jobs, and it works out. At 4.2, 4.3%, it's tough for companies to get the people they need to get. Mm-hmm. It's easy for employees to get the jobs they need, right? And so people are working. That's great. The GDP, or the gross domestic product of the United States, is strong. It's been between like 0.5% positive to 2% positive most of the year. The
last number I saw was 2.1, I think.
Yeah, it crept up a little bit more this last time, and that's good. And so, for perspective, if that goes negative 2 quarters in a row, that is what's considered a recession. So we're in strong growth mode. You don't want growth to be too much, because then you get inflation problems, right? So GDP is good, unemployment is good. The inflation numbers are still sticky high. The Fed would like it to be around 2%. Mm-hmm. It's tending to run more like around 3%. Once again, that's one of those numbers. There's different ways to measure it. Are we talking about core inflation, or talking about buying big airplanes or home purchases, whatever the case is? But the bottom line, generally speaking, inflation is running about 3%. The Fed would like it to be at 2%. Mm-hmm. And, they just had a new Fed chief take over in June, and the previous chairman left his last meeting in May, and there's 11 Federal Reserve banks around the country, and they were kind of mixed on whether they thought they should, lower rates or not. And President Trump has been pretty adamant that he likes to see rates lowered. And so when the new Fed chair, Walsh, was in charge in June.
Warsh.
I've been fighting all my life.
You can't say wash.
I've been fighting all my life not to say warsh.
I know. It sounds like we're saying it with a Southern accent.
Right. But in June, I was talking about this on the radio show. I said they shouldn't lower rates, but it's possible that they might, because Trump's appointee.
There's so much political pressure. But here's the thing. The math doesn't support it. Because if you think about it,
yeah,
the Fed's
we should
jobs,
be lowering rates.
Fed has 2 jobs, unemployment and inflation.
Right. And both,
unemployment's good. Inflation's a little high.
Yep.
So that doesn't support lowering rates.
Exactly. If you're low rate, it'd be kind of like throwing gas on a fire. You just don't want to do it. And especially with this volatility right now. So the bottom line is they didn't change rates. So they held the line the way that I think they should have. And they normally, what the Fed's done the last several years is they tend to wait till September. They get the summertime numbers, see what the country's doing as far as vacation spending and those trends. Well, this year, even more important, you've got the summer spending trend, but you also have what the heck's going on with Iran, right?
Well, let me ask you a question real quick about summer spending. And
Sure.
and this might derail you a little bit because I didn't tell you I was going to ask you this because
All right.
I literally just thought
I
of
got
this
my baseball
question.
glove on, curveball, here we go.
Ready to go. Summer spending. How much of that do you think is impacted by the World Cup being hosted in the United States? Like, is that taken into account?
I mean, it's going to filter into the system somewhat. I don't think the overall, some of the information I've received, it doesn't sound like it was quite as much impact as different cities around the country were hoping would be, but it certainly was positive impact.
Sure.
Like here in Kansas City, England and Argentina, both home based here, and they're still in it. I mean, as of recording today, they're still in it, and they stayed around.
Right.
So that's really positive because Kansas City kind of thought that once they got past the group level, they would go someplace else, and they didn't. So,
Right.
So that's great. So I know Kansas City's had good impact, and all reports are Kansas City did a great job on that. But there certainly is some impact on it. I mean, you can't have an influx of people from other countries come in
and not impact.
Yeah.
But I do also wonder, actually, now, in this, again, I'll let you get back to Iran in a second, but one of the things that I've been reading about and learning is, yes, there has been an influx of tourism because of the World Cup, but the locals have actually gone out less because, my family is a great example. We love to go on the weekends down to the River Market area, down to the plaza. We haven't done that during the World Cup, mainly because it's just so crowded.
Well, and I haven't fully seen that, but part of that's because I was gone for, as you know, 3 weeks out east, hitting our clients at a conference and spending some time with MIT at the longevity studies. So I really wasn't here when it first hit, but from what I've seen coming back, it doesn't seem like it's a big disruption to traffic pattern locally.
Yeah. Okay. Back to Iran.
Sure.
Sorry.
So again, Iran, I think we need to see where that's going to end at. As we sit here today, 5 hours of heavy bombing last night, overnight. And, the Strait of Hormuz is controlling the oil flow and shipping. And so I know President Trump right now is saying he'd like to take control of that. Whether we have the resources to really justify that or not, who knows? And what the end game for that really is, we'll see. But we need to get Iran figured out. I mean, the bottom line is, and this is not a political statement, but I don't think anybody in the country wants Iran to have a nuclear bomb. So that's the bottom line. How the rest of it shakes out, we can argue over and arm wrestle over, but I don't want them having a nuke. So if it all gets done and that happens and we don't blow our budget with oil going to 150 a gallon or a barrel and crushing our economy, we're okay. Right now, it seems like the impact on oil is less and less every time bad news comes out. It spikes a little bit, but we're not seeing.
Well, we're getting kind of jaded, honestly. We've heard it all before.
And that's the way it was with the tariffs last year, and that's the way it was when Russia invaded Ukraine or in the
Brexit, or you name the thing.
Or as in the great movie Animal House when Hitler bombed Japan or whatever they said was totally wrong.
I haven't seen Animal House, so I'll leave that one to you.
Yeah, it's from the Belushi thing. It's pretty funny, but he says it exactly backwards. That's when the Germans bombed Pearl Harbor. So the Japanese. But we're getting jaded to it, but usually when you have these types of shocks come out in the news media, it does affect the stock market, sometimes oil. This was more oil driven because Iran and oil and all that type of thing, but it usually simmers down after a few weeks or a month or so. Last spring, it took about till May for it to bottom out and come back up and realize the tariffs weren't going to be a massive war and a big problem all over the world. And we predict that from day one in the radio show that, hey, this is going to be a short-lived thing. It's fine. In the long run, it'll be okay. Same thing with Iran. It's not a big enough deal to totally crush our stock market. And the stock market's been very good. I mean, it was down for a while, and then it's come back up. And almost on a weekly basis, we see one or another of our major indexes, whether the NASDAQ, S&P 500, or the Dow Jones, we see one or the other of those tickling a new high. They don't seem to be crashing through the ceiling and just going off like a rocket, but they're kind of plateauing along and tickling up to a new high, and here we go. But, and again, back to what you guys covered while I was gone, year to date, and again, we're recording this, July 14th, 2026, but, recent numbers were that those Magnificent Seven stocks that we were concerned about being overpriced, our due diligence and caution is paying dividends right now, because those stocks are only up around 3% for the year. Right. The other 497 stocks,
493, yeah.
493 stocks.
Yeah.
Kitty math.
Yeah.
They're up like 14% for the year.
And I've got a great chart on that, so hopefully it'll be showing here in a second. And I'll make sure that
the chart below.
I'll make sure we get the chart in the video, because it's really interesting. It looks at the 493, the Mag 7, and then just the blended S&P 500. And the bottom 493 for the first time recently are actually beating them. And so that just kind of illustrates the point of high quality diversification. And it also illustrates the point of, I think, a lot of investors that we don't work with every day, but ones that we talk to, and we have investors that have friends and neighbors that they hear things on the news or they hear things on podcasts or whatever, and they say, oh, I want to buy, XYZ because
gold,
it's all
Bitcoin,
the rage.
Whatever, right?
Or no, even these Mag 7, because it's all over the news and people have a fear of missing out and they want to participate in those things. But here's my kind of contention on that. By the time you've heard it on the news, it's already too late.
Right.
It already did whatever it was going to do. And so that just highlights that point. And it sometimes when it feels like everything's going gangbusters, it's easy to have that fear of missing out and want to participate in that. But as a reminder, and Bruce, thanks for sharing what's going on in the world and what's going on in the economy. But I think in general, I would close with this. We're not investing for the next year. We're investing for a lifetime, and quite frankly, for generations after that. And so while we need to be aware of what's going on in the short term, and we need to be aware of how that impacts portfolios, we also have a huge time horizon of, hey, what does this look like to get someone through retirement, to get someone through children and grandchildren, or gifting, or foundational support, whatever that is. It's not about what's happening in the next 12 to 18 months. So while we're aware of what's going on in the world, and while we're definitely making sure that that's, appropriately addressed in investment portfolios, we've got such a long time frame that we need to focus on. So thank you so much for joining me. I really appreciate it. If you have questions about anything Bruce said or anything I said, or just questions in general, reach out to us at info@rallywb.com. We'd be happy to help.